The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's 11 o'clock Eastern Time, and of course Monday through Friday on market days, right here in the chair. And thank you, Steve Rhodes, for 2 great hours lead-in, and we have programming here all through the day, right up until 6 o'clock this evening, and it's archived, so there's no excuse not to listen to your favorite shows. Let's get to the nitty-gritties here. You had a little bit of a down day on Friday, down 318 or 16 points. In the Dow, commensurate decline in the S&P. And my Chapman Wave chin gauge said that there's a good chance that within 1 to 2 days, if the futures are up between 7 and 9 points, there should be a rally attempt, pretty decent rally attempt intraday. And then you've got to be careful, and that's basically what we've seen today. Whether it's run its course or whether there's going to be a brand new set of buying coming up a little later on, a lot depends on the volatility index, which hit, it was way up in the, it really accelerated. Right now the VIX is down 30 cents at 17.84. But we saw quite an acceleration in the volatility index based on the weekly chart, where for the first time in quite some time, the VIX closed at its high for the week and gave a pretty good reading to suggest, as I've been talking about for quite a little while now, that that January should be a down month for the Dow. It should see some kind of a top, and a top that could last for a little while. I had no idea how deep it would be. I have a guess. I can give you parameters. But most importantly, the speed with which the failure occurs is really your key. There are a lot of people that completely missed going short or getting out or doing anything negative. You listen to any of the shows, your perma bears have been perma bears, and majority of the bulls are staying bullish, and they are considering this just a pullback. I think this is a lot more serious. I think that we're going to be going down for, well, the Dow's already been going down since December the 31st. But now I think that we're going to be going down until March. So, and yes, we've got earnings with Apple coming out tonight, but let's just go straight to the numbers. The IYT, which is the iShares Dow Jones Transportation Average, in the Chapwave methodology is giving a leg D in the monthly, which means that unless 135.93 is not taken out in January, you've made a peak D. In the monthly, you've already made a peak D. If there's no new high this week above 135.93, and I just can't even imagine how we could get there. That's a peak D. MACD's just turned down quite sharply, and the stochastic is still positive at 82%, but the actual moving averages have turned down sharply, as well as the on-balance volume and the relative strength index. We've got a peak F top in the chart. Let me just explain that quickly, because some of you are new to TFN probably, just maybe tuning in at least to my show for the first time. I have a very simple technique in concept. You go from the most obvious lowest low bar, and you merely count each successively higher peak. When you get to the fourth highest peak, I alphabetically label them peak A, peak B, peak C, D. You can go to E, F, and even a G. That's rare, but you can get there. Or you can recycle at D and start a brand new buy mode that takes you all the way to not just 4 higher peaks, but to 6 higher peaks from where you were. It's extremely bullish. However, let's do one thing at a time. What we're looking at here is that in the IYF, you went to a peak F, top the 6th highest peak, gap down underneath the 9-period moving average, that black line. You also had a 133 round number open the following day from the high, when you made 135.93 on the 23rd of January. And you're following that with a very ugly candles today, so far. And the day is not even an hour and a half, hour and 3/4 into the first session of the week. So we're still young. So that's the transportation index. Why did I bring that up? Because if you put it together with the Dow, you got the Dow theory, etc. The transports confirmed an all-time high 23 days after the Dow and made the December 31st 16,588 high. And you're in leg D today. I thought I had a chance of trying to turn around and hold. But intraday, we did everything early in the morning. And after 300-plus down session, this is not what you want to see. Dow down 2.76, down 3.34, down 5 at 15,873. Not good. It's not even an inside day. This is just really negative. The weekly chart has made a peak D. I haven't spoken about this for a while. I've showed it to my subscribers and discussed it in greater detail. Showed it today in great detail, in fact. There's a Chapman wave methodology, a technique that I developed way back in the 1980s when I used to hand draw the charts. And what I noticed was that there was a particular move that saw a very powerful move to the upside, which I call a leg. It's different to the leg A, leg B. This is just a single line going to the upside, made up of a number of different legs. But it really looks like a single leg. And then you get a body. You get an oval formation. And that oval formation suddenly sees a breakout. I used to look at this oval formation as a propeller shaft breakout. In other words, the entire move from the low to the high of the leg, then the oval was the propeller fulcrum, the midpoint, and then you would get an equal move to the upside until I noticed that there were enough times where we only made a nominal move to the upside. We did not make an equal move. So I decided to scrap that as a technique. I do not use techniques that I do not use in real life, or I go through it with my subscribers for months and months and months before I call it an official technique. In fact, I don't even introduce it as a technique until I've used it for months. Why? You can find the most fantastic looking indicator at any point, and believe me, if you haven't put it through the tests, not only that, going back, how can you be wrong? You can always say, hey, the market's going to go up from the 16th of November, 12,471 to the 16,588 high of December the 31st. Why? Because I'm looking at a chart, and that's what it did. Is that wrong? No, it's 100% correct. But tell me right now, what is the market going to do? That's where you want to use your techniques that have a history of correctly forecasting. And I talk about a history meaning dozens and dozens of times being repeated. So this particular technique I used, and I found that you get this leg, you get the body, and then the moment you break by 1 penny the oval shaped, what I call the body, let me just type this in. Here it is. This is the leg, L-E-G. This is the body, B-O-D-Y. And then the moment you break the body, the arch high, you can extend up, and that becomes the neck. Now, why did I call it a stalk leg? Because the neck goes up, and you can get a little bit of a head, but in fact it's really more like a beak very often, and that beak comes down like that. Where does it go to? Well, that's what we'll discuss in a moment. So now what you get is the neck. All right, move that over. Oh, it's a little bit too big. I'll make it smaller later. And this is the head right there, H-E-A-D, and this is the beak. Where are we right now in the weekly chart? We are in the beak formation, going down. What is the rule in the Chapman wave methodology of the stalk leg formation? That once the head is formed and the beak starts, the beak should go to at least the top of the oval body. That means you should go to at least 15,658. That's another 230 points down from here. And if that does occur, anywhere from that moment on, you've got to use other techniques to find where your stopping point is. But that is what this technique is all about. So here we are, we're in the beak, we're about to test, and there should be support right here because you're testing the inside track, Chapman wave inside track support area, the area that I normally say is a buy or a propellant zone. If it fails that, if the Dow closes at any point this week at 15,000. Let me just see here, 15,800 or lower, there's a real big problem. So let's go on now, and what we'll talk about is, and it was a peak F top in the daily chart. S&P, SPX, and then we'll go to callers. Let me run the numbers. SPX is down 3.85. That's the S&P 500, having made a peak D at 1850. Alternate count G/C in the weekly, but what it did, went right into the Chapman wave inside track repellent zone, the sell or / repellent zone, pull back, and it's going to be really important that this particular inside, let me just do this just to show you, right there. On a weekly basis, 1753 is going to be really important to hold on a weekly basis. Monthly is the Dow was in monthly potential peak D. The weekly, the monthly in the S&P is still leg D. I had a question the day. Chapman Wave Beak Target, Basil. I don't recall ever reading that targeting tool in my Chapman Wave CD. That's because this particular technique, I had used it for years, but I really wanted to officially use it, and I don't believe I'll check. I don't even believe it's in the CD. This is a technique that I developed later on as a formal technique, because I remember distinctly the year 2004 going to 2005, about a year and a half after I joined TFNN. We were down in Florida. I was walking along the beach. Well, it's a long story. I don't want to get into that now. Anyway, I came back just in time for an interview with Tom. We were down at a big conference down there at Clearwater, and I discussed that very thing, the Chapman Wave stalk leg formation, and how the beak most of the time comes back to the body. So, okay, let's just quickly do this. We got the QQQ series down 62 at 86.12, having made a doji peak D in the daily, G/C in the weekly, and an E, leg E in the monthly. Let me just quickly go to gold. Whoopsie, waiting for server. I can get it right here. Oh, there it is. Gold is trading at 1260 down 370. S&P is up 0.07 at 19.83. That's silver. Crude oil is down at 326. Not good at all. Down $1.15. Bonds are, I'll tell you right now, the TLT is down 6 cents at 107.42, so bonds are about unchanged. Dollar is down a tad, and the euro is up. And we're going to go to our first caller. We've got Bob in Rumson, New Jersey. Hi, Bob. How are you?
I'm good. Basil, how are you?
I'm very well, thank you. You'd like to look at?
I guess Royal Caribbean after the break.
All right. I must have notated this, I don't know how many times. That and what's the other one? CCL, Carnival Cruise Lines. I'll get it redone. Takes me just a moment. I'm getting fed up with TradeStation doing this to me. I'll be right back, Bob, straight after this break. Dallas up 22, S&P's down 4.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Let me just quickly find, I don't believe it's in your stock leg formation. Check it out. Searching 476 slides. No. Yeah, that came afterwards. So the answer is you're correct. You did not see it in my CD introducing the Chapman Wave methodology. As I said, I only like to use things when I've tried it out for a very long time, because it's the only way you can really, you have to go through different markets in real time. You can have all the techniques in the world, but in real time, you've got to be, that's why I love using the lettering. Look at this, CCL, which is Carnival Cruise, and just announced, I don't know if they announced it, but they just got 300 passengers or something brought back, or at least were sick on the boat. You know, they keep getting they contract these very easily transmitted germs, and you know, you get a lot of gastric problems when that happens, and this is it. And the reason why I get so upset when I lose these charts, doesn't bother me that I have to make them up. I can make them up in a second. Is that I'd written down that whole story when that boat capsized. It was somewhere over there. And I like to have all that stuff there. I have to take a lot of time to notate that. Anyway, let's go back to Bob. So, Bob, what are you doing with RCL, which is Royal? Let me just tell you right now. Royal Caribbean Cruises, and it's trading at 48.02, 47. Oh, it's jumping around. Up 85 cents, having made a peak D top at 50.0. 50.24. Let me look for round number high the very next day. I have to tell you, that's when you put your technique together. What did I say? 50.42. Let me type that in. 50.42. And then the very next day, 50, round number high. Oops, round number open. Yes. So, Bob, what are we doing?
Well, what I did was I went short this morning at $49.
On the pop-up, very good. It's trading at 48.02, yes.
And, really the company came out with earnings. They beat their expectations, but using, your system it's like going to church every Sunday, for me.
Thank you.
I love your system. And, so I
The only difference is that you won't fall asleep in this sermon, right?
That's correct. So, using the Chapman wave, basically what I did was I took a position by using the February 22nd $49 put.
49. Oh, okay. So you at the time that you did that, you were just almost in the money, and now at 48. So the put that you got,
money by $1 now.
Now you're in the money by $1, but you're out. You're $40. You're at
49.10 or so, and my stop was set at $50.24.
So I'm going to make the recommendation because I do have an alternate wave count in the weekly, and the weekly is the unbalanced volumes turned down, stochastic has turned down, the MACD has turned down, but both the MACD and the stochastic are still in very positive territory, and so is the monthly. And this is one of those things where using the timing of the shorter-term trade. I don't know if you looked at the 120, but the 120 gave an absolutely perfect peak E-top at the 50.24 high. So using that particular technique, you've now gone to trough A, B, C. No, this is C right now with a big pop-up. And this pop-up is a pop-up, so they came out with good earnings, huh?
They had good numbers, yes.
Wow, okay. So here's my thinking. I believe you got in at a perfect level, but the stop at 50, I'd start looking at 49.73. If it popped up to 49.73, there's a chance it's going to try to hit that 50 number, so that's something that you might keep in mind. The action that is unfolding right now reminds me, I went to my opening call for subscribers. I've been very good lately about looking at the earnings when earnings are coming out for all the new positions that we get. And for some reason, I was so busy on Friday. I love the action on the short side for Covidian, and we went short. Little did I know that was the day of earnings, and the earnings come out and it spikes. So we lost a point on a $68 stock. It's really not a big deal. It's a very big deal to me. It's a big deal to people that were short. But in percentage terms, it's not a big deal. It's just upsetting. And now look where it's trading. It's trading at 67.57. So let me just do this for 1 second. I just wanted to say to you, on your position right now, I think you're absolutely in the right position. I want to look at today's Wednesday, if you don't mind. Let's look at it again, okay?
Thank you. Thank you for your time, Basil.
Thank you, and congrats. Great entry point. We'll be back with Mike in Lakewood, California.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow is now down 8. S&P is down 6. Gah, terrible market. This is the start of, as I said before, it's a sell mode in the daily, sell signal in the weekly. You're going to be watching to see if this week we go quickly from a sell signal to a sell mode. Let's go to Mike in Lakewood, California. Hi, Mike. How are you doing? Mike, you there?
Yeah, you just cut me back in. Yeah, I'm doing fine. How are you?
I'm well, thank you.
Yeah, I'm calling you about BIS. I called you about this back in December. It was around 22. I decided not to buy it because I thought the market just had too much euphoria in it.
Congratulations. That was a good thinking there.
So I've been waiting and waiting. I actually just bought some while I was holding on to talk to you. I want to know what you think about it now.
Well, this is a very interesting situation because the BIS is the exact name of it is the ProShares Ultra Short NASDAQ Biotech ETF. And what it is it is the short side, let's call it the double short side, of the IBB, which is the iShares NASDAQ Biotechnology ETF, which is in leg F/B. The way I'm looking at it now, I've got it as a greater chance that it's in an F, but that if it holds over the next 4 to 6 weeks, if it holds, it's at 232 right now, and if it holds the 218 to 216 area, that'll be very good action, saying that there's a chance that there's a final acceleration to the upside in the monthly chart to maybe make a G, and then I think it's all over. That's what I'm thinking there. But on the shorter term, I had to go with some other of the indexes, and I just off the top of my head, am I going to be able to find that? There it is. I'm going to go to the BTK, if you don't mind 1 second, because it's also very important to look at BTK. There it is. So the BTK has a chance that it made a G-top, and it is the Amex Biotech Index, and it's leg D in the monthly. Peak E, I'm almost pretty sure that there won't be a new high this week above 26.38. It's trading at 24.59, down 67. This particular index is saying to me that together with the BBHs, if I go through them all, I do have some unfinished business, but the weekly charts are more important. That's the tide. So the daily chart, it's unusual to go to all-time highs and fail at a peak C, but I don't want to change the way I deal with this particular index. In other words, I could call it an alternate wave count, but I just want to leave it as it is, because the weekly charts are saying, hey, we are way overbought and we are coming down, and there are certain levels to watch. So now let's go back to the IBB, and I'll tell you what I'm looking at. Your BIS, if you had said to me prior to the opening this morning that you were going to buy it close to the close on Friday, I would have then had no choice, and I would have said to you, that's fine, because I think you're going to look really good looking out, but on a very short-term basis, there is a chance that this is the first deep down move that the IBB, that the biotechs have had to the downside. They surely would be a bounce. And here I am looking at the IBB down 7 at 236, down more today than it was on Friday, with the S&P down so much, and the NASDAQ. So this is saying to me that I have, for my subscribers, we are short from 353 and 253, and the all-time high was 254.11, 253.40. Now that says to me that being less than a point off the top, I've got some leeway. With your BIS, what you're doing is you're shorting based on the 236.60 or 50 or 70, somewhere around 236 as your benchmark. So here's what I'm going to suggest. This is just for you, like a starter position, right? Or is this the position that you wanted to take?
This is pretty much the one I want to take.
Okay, if that's the case, then all I'm going to do is say to you, I believe you're going to be correct, because I have a target for the IBB to fulfill the, if I consider that 228.11 high back on the 27th of December as really the level that the IBB broke out of, then 228 to 225 should in fact be the test over the coming weeks of support. So that means it's 12 points on the BIS. That's very nice. But it also means that looking at the 120 chart, if I can look at the 120-minute chart, if there's a bounce, you got to be prepared that the 236.70, there could even be a bounce in the IBB towards the 239, even the 241, 242 area. And then I think a kind of a lowercase h pattern will form, and then it'll go back down again. So just on a short term, I think you've got a little bit of risk in that there are going to be a lot of attempts from this area right now where there was some support back in the 13th of January. Remember that big move, 180 points, I think, to the downside? Well, the Dow has, the IBB has 233.99, call it 234, and today's low is 234.28. So you got just about into that support area. I don't think that's going to hold on the next time down, and what I'm looking at is the trend line that comes up, which just held, says that if it breaks underneath, if the use the IBB as your benchmark, right? So 233, if it breaks under 233, there's a good chance that 228, the 200-period exponential moving average in the 120-minute chart, will be next. So I'm going to suggest to you that you're in the right position. for this particular index at this particular time, but you've got to be prepared that you've had a tremendous move from 254 down to 234. That is, for this index, you'll find me another time where it's dropped in 2 days as much as this, and the only other time was 3 days when we were short there as well. Back in August, it went from 201 down to 187. So this is comparable to that. The difference is that the MACD went a little higher and the stochastic has turned down. So how the candle to watch is the candle from the week of the 10th of January in the weekly chart, and that has 222.29. That candle with the two little doji candles on the left side of it from the week of the 27th of December between 228 and 224 and 227 and 224 the week of the 3rd, that area is already my target area. How it handles it, what happens at that particular point, all going to be very important. Just on a short-term basis, be careful because this could bounce a little bit. So that's the reason why I asked you if this was the position, because if you were thinking of adding another position or a third position, I would say the next position that you might want to think of is a bounce could take you to around about between 240. Gee, I don't see the 9 EMA at 243 coming into, not yet. Yeah, between 240 and maybe 241, 3-4 points higher. That's all I was going to say. You could add to your position there, but I think you're in a good position. So,
okay, well, I'm sorry. Go ahead and finish.
I was just going to say the next 2 days will be very important. So let's look at it Wednesday or Thursday together, and we can do another assessment. But looking out, I think you got it right.
Okay, thanks very much. You have a good day.
Thank you very much, Mike. I appreciate that. Let's go to Lou in Nashua. Hi, Lou. How are you?
Fine, thank you, Basil. Where's your target for the S&P?
For the futures or the S&P itself?
The futures.
Well, let me put it this way. In terms of this is a very big move that's occurred already in the futures. Going because of the intraday work. It went from 1846 down to today's low. Wow, it didn't even hold the patriotic 1776s from last night. It went down to 1775.50. My 120-minute chart says that if it closes under 1773 in the next 120-minute bar, the next 1 or 2 120-minute bars, that's very poor action. If this acts as an H and there's a bounce, the bounce could take it up to 1781 to 1783. It could even retest today's high of 1792, and then that would take it to 1795. So the bounce says those are the levels on the upside. On the downside, I can just tell you this, that if the major channel support in the E-minis of 1766 is taken out, now I want to go to the cash because I do a lot of work on the cash and I wanted to just use that as a benchmark. The cash would be in that channel. Is that a channel or is that more? Yeah, I'm going to treat that's a channel. Okay. And the test there would be 1745. So between the two of them, those are the levels that I'd be looking at. But I must tell you, I'm going to just do this now. I showed it to my subscribers. I'll pull it up again if I can, right here. There is a really good chance, this is not the chart that I wanted to show, but it's just the chart that I've discussed enough times that I wanted to show it again, that after a peak C that extends to a longer term move to a D in the monthly chart, you haven't gone very much further than a very quick few months to a leg E, and then that was it. The major high of October of 2008 was at 1576.09 in October, but you got peak D in July. So now, and if anybody remembers that period, remember the period from July, the majority of people thought that was it for the market, but in fact we climbed to a higher high. That confused a lot of people. Now we've just extended that peak C correlation to a leg D, which in the monthly chart is still leg D, and that is a little unusual. And that says to me, if the S&P is going to copy the Dow, which is probably making a peak D, I don't see any chance this week that the Dow can go to 16,589 and make it an extended leg D. This is peak D. That says to me that there's a real good chance that the S&P will make a peak D, and that will be the month of February. And if I'm correct in that, then 1718 is the 9-period exponential moving average major support in the monthly chart of the S&P. So my target is if that's 17, what did I say it was, 1760, no, in the cash, it'll be, if 1748 is taken out at any point in the next, that's 600 points in the Dow in the next 2 weeks or so, or maybe 3 weeks, then my target would be 1718. It's going to be really important as support in the S&P. This is now looking out into late February, early March. I hope that helps you.
Yes, it does.
So it means that if one was short already in the S&P, in the E-minis, that would be great because that gives you a tremendous cushion. Right now, a bounce from the ugly candle that we saw on Friday, a bounce could take you right to the middle of the move. I'm not sure where it would come from, especially if the IBB continues down like this. And my thinking has been all along, when the IBB finally goes and the volatility starts to scream higher, that's when this market makes a 4 to 6 week correction. So that's kind of where we are. So the resistance, outside chance, 1800 to 1806, a bounce in the Dow, in the S&P cash, and 1805 is the 9-period exponential moving average. I'm really looking at lower lows and lower highs for the next quite a few weeks. Hope that helps you, Lou.
Okay, yes, it does.
And your UNG, you remember all that work I did on the UNG, and then I didn't go long, did exactly what I wanted to see, and that was to go above the monthly chart high in the continuous contract of $24. It went to $24.89 on Friday. So
yeah, great.
That's a tremendous move for the UNG. I'm just upset that I did not get my subscribers in when I was talking about it all the time, and it was such a positive chart formation. But I know you watch it real closely. Now it's going to pull back a little bit. I would not be surprised if the UNG between 23.20 and 22.30 actually finds some support and tries to have another bounce. We'll watch that one closely.
Right.
Thanks for calling.
I just got out this morning on that pop.
You what?
I got out of natural gas on that pop this morning.
Oh, fantastic. That was a beautiful move. Congratulations, because that 120 is A, B, C. That was a perfect peak D in the 120. Oh, Lou, that was beautiful timing. Congratulations. Now, I should pull back a little bit, but you know what? If I'm correct that this is leg B in the daily and not a G, which would be very unusual for this particular move, it could even go a little higher. So we'll be watching it very closely. Thanks so much for calling, Lou.
Well, thanks for your help.
My pleasure. So, folks, let's do this. I want you to just take a moment here. I want you to go through a couple of, there were a couple of questions. Basil, the bull market is extended longer than the other moves in points and percentages. Just thinking how it compares. Yeah. You know what? It depends on a percentage basis where you come from. You remember the 1994? I remember being the office of, what's his name? Used to have a hedge fund. Vinnick, and we were looking at it in 1994, and it made the cup formation, and then the moment it broke out, that was just a huge breakout. Anyway, we'll be back. The Dow's down 17, the S&P's down 7. I want to look at a couple of other indexes just to show you what I'm really looking at. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We are back, and we've got just a short while remaining. I just wanted to do a couple of things. Wanted to show you something that I thought was very interesting. The HGX. That is the Philadelphia Housing Sector Index. As I see it right now, it's made a peak D in the daily. That's in the Chapman Wave methodology. Peak D at, I think that was about the 11th or something. What was that? 10th of January at 204.78. It's trading now at 191. The cup formation failed to go to 210.01, the high of the middle of last year. Peak E in the Chapman Wave weekly chart. So it's a peak C, and it's pulling back a little too deeply, just to say, hey, that's a C going to a D, because this looks like it's just starting a move to the downside. And that says that the real important support will be at 184, the candle of the 13th of December. Now, this is really what I want to look at, is at the monthly chart. Back at the peak E-top in 2005, remember we were on air, we were looking at this just week in and week out, looking for a top. Finally, we got it with the confirmation of a peak E-top back in August of July was I believe it was July. Yeah, July of 2005 at 293.66. Comes charging down to 54.31. Has a fantastic 400%, almost 400% rally to 210.01, also peak E. So I'm looking at this and I'm saying, okay, this should be just a pullback. But wait a minute, it's a cup formation and a failure formation in the MACD and stochastic. So I'm a little concerned here. My thinking is that the houses, I had a lot of people ask me lately about the housing. I won't get into that. Just in terms of the stocks that we usually look at, Toll, Lennar, Hovnanian, I must tell you that I'm a little, I was a little surprised. I thought they would be coming down, and they have come down, but the thing I'm surprised at is that the last rally didn't even get close for some of them to the old high. Lennar, not the old high. The old high was way higher than that. That was Lennar at 68.86 high back in 2005. So the reason, and then it went all the way down to pennies. It went down, I can't believe it, $3.42. And then it ran back to a high of 44.40. So it drops to about 30.90, retraces, and it goes to 39.91, and this is the one that's got me a little concerned, because this right shoulder failure pattern for Lennar starts to take out the support at 36.61. If it takes out the support at 36, it could quickly go down to 34 to the 33 level. So I'm watching these real closely. The other thing, I spoke about the transports. They've been on fire, and now they're being fired down. And the IYR question in the den, the IYR has made a peak E above the 200-period moving average in the daily at 62 on the 22nd of January, and a lousy chart pattern in the weekly, and the monthly has made a peak D, and it's not really showing much sign of strength. I'm a little concerned about that whole real estate area at this particular point. So we'll be looking at this a lot. In fact, I'll do a little work on it. Maybe in the next 2 days we'll spend some time on the houses, on the housing stocks and the related building stocks. But in the meantime, I just wanted to say that we've got a unified down move now because the IBB has joined in. And boy, when that IBB joins in, that has not happened before. In fact, I would even say it's kind of leading the way down 3% today. The general market's down only 0.32 and 0.61. I think this is very serious. A lot of profit taking there. Now, let's just run this through. You've got Larry Pesavento coming up. Fascinating. Should be a fascinating show. Larry's been all over the gold, or the rally in gold, and where it's all the support levels, as well as the general stock market. So it should be a wonderful show. I'm looking at the volatility index. I try to make it as easy and clear as I could. Volatility index getting into the 18s to the 19s says be very careful, because it's just a hop, skip, and a jump to break that resistance trend line in the weekly and get to the 20s. Once you're in the 20s in the VIX index, it tends to make higher highs and higher lows. Folks, be really careful. Don't forget, if you want, you can go to my front page of TFNN and check out my opening call. It's a very interesting newsletter. I'll be right back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.